Hey guys, what is happening, and welcome to this video. So yeah, we got new camera equipment, we got new microphone, and I am excited about that because what that means for the channel is it means we can go out and about, we can film outdoors more, and we're gonna have a lot more fun on this channel than just seeing the inside of the room that I was filming in there before. So anyway guys, today we're talking about economic cycles that are playing out right now, how this is gonna affect all the asset bubbles, stocks, real estate, crypto. So without further ado, let's do this. Okay guys, so I hope you're enjoying the winter wonderland that is happening right now. Hopefully my camera doesn't break because I've left it out in the snow. Anyway guys, what we're talking about here is how QE has absolutely failed and how and why it was implemented in the first place. The thing is, when the cerveza sickness started, obviously everything got shut down, and that means that less goods and services were being produced. Now, guys, if you didn't know this, and I know most of you are smart out there, you know this, inflation is a direct measure of the dollars in the economy chasing the goods and services that are available in the economy. So obviously if the goods and services are heavily shut down and restricted, then that essentially means that, guess what? There then becomes a deficit of goods and services. But it didn't really matter that much at the start of the cerveza sickness because obviously velocity was so low. People weren't actually spending any money, so it wasn't a big deal. But then spending started to ramp back up to what it was before, but now there's a lot less goods and services being produced. So what does that essentially mean? Well, it essentially means high inflation. That's exactly why we're seeing high inflation right now. It's because there is less goods and services being produced than there was before. And not only that, we have monetary policy that is just ridiculous, way too low, way too low. And that's just my personal opinion. But guys, what's going to happen, and this is not financial advice, don't take this as financial advice, what I believe is high probability to happen is you're going to see interest rates rising. Now, we're already seeing governments set the stage for that in terms of curtailing their spending. We're already seeing central planners come out and say this monetary policy is not going to be as accommodative as we once thought. And even the Bank of England, the Fed, the Bank of Canada, the ECB, they've all admitted they don't have a clue what is going on with inflation. But if you follow George Gammon or you follow Lynette Zhang or any of these amazing YouTubers, you'll find out very quickly that inflation is being caused by the restrictions that were put in place. That has gone now. But the real inflation that's being caused right now is too many dollars circulating in the economy with not enough goods and services. So essentially what I want to talk about is quantitative easing and how that's meant to play out, how they envision it in their heads maybe, but I doubt it. They really only do it to prop up asset bubbles in this day and age. Because QE can actually be a good thing, believe it or not, guys. QE can actually work under the right circumstances. So QE essentially is meant to do this, but it doesn't anymore. And it has failed catastrophically to do it ever since the GFC in 2008. And what it's meant to do is it's essentially meant to pump more dollars into the economy in the hope that in turn people take those dollars and they create more goods and they create more services, and then you wouldn't actually get high inflation, believe it or not. But that's not what happens anymore, of course. So what happens is they create more dollars, and those dollars that are created are pushed into unproductive things. And that could be cryptocurrency, precious metals, the stock market, real estate. It doesn't matter. But what does matter is which one of those is in an asset bubble. And as we know, the things that are in most of an asset bubble right now are stocks, real estate, cryptocurrencies. Precious metals aren't really in a bubble and haven't really gone up that much. So I'm not worried about precious metals being in a bubble. But the thing is, which you need to realize right now, is the monetary policy that has been put in place, the QE, has failed completely because people have put the stuff into unproductive assets. So what does this mean going forward? Well, they're setting the stage now for QT, which is the opposite of QE, where they're going to take dollars out of the system. Because, okay, now you've got a system where high inflation is going up, people aren't using those dollars productively, so now you need to take them out the system so inflation goes back down again. And I think what we could see play out is essentially a scenario like the 1970s, where it was just disastrous for people holding assets, because essentially the monetary policy was going up and down in waves until eventually where they said enough is enough, we're going to have to jack the interest rates up so much so that we can reset the debt cycle, so that we can reset the asset bubbles and move on. The economy can recover and move on, because you can't have it right now like it's going to go into, because we've got like 3 scenarios, guys, which I believe are going to happen. One of these 3 anyway. We're either going to see interest rates rise, then they reduce those interest rates back down, and what that means is, if they're reducing those interest rates back down, you end up with the same effect as we've got back now, and it just keeps going back and forth. But asset bubbles like real estate, they start to collapse in that sort of environment because of what they did, like they're going to do next year when they raise rates. The second thing I think that could happen, which I think is more unlikely, is they just start raising rates. They just start raising rates and they don't stop, like the Federal Reserve did in the late 70s. I think that's unlikely. I think we'll eventually get there possibly, but I think that's unlikely. The third thing is they're just not going to change anything. They're just going to leave inflation to get worse and worse and worse, and eventually the inflation will collapse the economy. And that's the thing, guys. When I say there's no good way out of this, I honest to God mean that. It's not just a joke or anything like that. So what you got to think about is, how am I going to protect myself against that? What did well during the 1970s? And I'll leave you on that note to go and research what did well during the 1970s. Most of you probably already know and are in that space anyway. And the thing is, guys, it's becoming more apparent now why the central banks want to go to central bank digital currencies. It's because, in effect, in the future, when we have CBDCs, which will be terrible in so many other ways for freedom, liberty, and all the rest of it, and I am not somebody who thinks CBDCs are a good thing, but essentially what will happen is, when they do QE, you won't be able to spend those dollars on real estate. Those dollars will be restricted to certain things, and that is when you might actually see the monetary policy stand a chance. But do I think we'll ever get there? Absolutely not, and I hope we don't, because CBDCs put more power into the central planner's hands than anybody can imagine. So anyway, guys, if you enjoyed this video, please like the video. I'm out here, it's pretty cold, it's snowing, so you gotta like the video just for that. If you didn't like the video, you know, you can do whatever, just dislike it. I'm not gonna get offended by that. We're all a community here, even the haters. And if you haven't already done so, please make sure you're subscribed to the channel. I have some amazing videos coming, going down to the States in December, traveling across 5 states. We're going to be doing loads of videos down there about the real estate market in the US as well as Canada, and we're going to draw some comparisons there. But anyway, guys, I will see you in the next one. Take care. Peace and love as always. Bye-bye.